Hello, good day everyone. In this our class lesson, I'm going to briefly show you what I saw, or just give you a kind of a commentary of what I am seeing on the V10. Send some charts in our Telegram discussion group on the V10, and I told you guys to study, and some of you came to me and was asking me to share what I saw, and why did I do this here, why did I do that there, why the price do this over there. So I'm just going to be showing the commentaries on what was going on in the price action here. So now, with that being said, let's just dive into our class lesson. So this is going to be a very quick one here. Alright, so yes, so now this is what I saw. Now I'm going to be instructing, and you guys be taking note too of what I'm saying. Now, we saw this, we are bearish, fine, but what do you see in this place? The market has been bearish, then we have a change in the state of delivery here. We have a low, a high, a lower low. That is a breaker, a bullish breaker, a monthly bullish breaker. So that's a monthly bullish breaker over there, but many of you didn't take note of that. So that monthly bullish breaker is what caused this market to skyrocket up here and respecting our monthly bearish order block. This is the order block. Some of you came here to meet to say this two candle, it's the order block, it's the bearish order block. It's not the bearish order block. When you look at price action, I said they can be created with series of down close candle, or you can see consolidation inside of one candle. Then you can take that, because it engulfs it. You can use that. Is what you are seeing, not what you are assuming. It's not what I said. You understand? This is a concept, not a strategy. So you don't think like that. The last up close candle or series of up close candle, you can use this. Do you know why? When you look at your line chart, do you see the delivery? We have buy side delivery, sell side delivery. One side, did it trade through it? No, but it did trade through this one candle. Yes. Then we have another buy side delivery of series of candles or up close candles. Did it trade through them? Yes. So we have order blocks inside of another order block. This is how you choose the right order block. So this is what we are looking at. We are looking at the delivery. It delivers into this fair value gap. Correct. No, there's no story about that. We saw that very well. It played out well. Now we are bearish because this is a mitigation block. This is mitigating. We have a high, a low, a failure swing, then market drop aggressively. This last down close candle that created the mitigation block was respected. Extend the low of that last down close candle. That gives you your bearish mitigation. So this is a mitigation. So I'm expecting this mitigation block to be broken in future, but it's going to take a very long time, maybe probably to 2024. Now there's a change in the state of delivery. Beautiful. It's a breaker block. In discount, this is a discount array, a discount breaker block. Now do you see what I'm seeing here? A low, a high, a lower low. Now among the R rankings of ICT speedy array, mitigation block on a premium array do not tend to stay strong. Now, especially when we are having a breaker bullish order block, which is sending a very strong signal that I'm coming to break you off. So the mitigation block don't tend to hold price. This order block might hold price. but not this mitigation block. This is a mitigation block because it mitigates here. This is what created the mitigation block. The failure swing has been created. This is the candle that created the so we are trading now. The most important candle here that is important in that mitigation is the close, the main threshold, and the low. Those are the three levels. Actually, they are all other blocks anatomy. So if you look at this properly, it is another block if you extend it in time. But we are bearish, but we have a change in the state of delivery, which is perfect. Now we have a fair value gap that did not close completely. Another signal. This is a very good signal that we are seeing here. It's very, very cool. So this fair value gap, I would like to expect it to stay open or wicked in. So now this market has this fair value gap over here has stayed open, was not completely filled. So that's why we have that run. Now it's coming down. Probably you guys will think it's coming down here. I am not verging that, but now I'm concentrating on this fair value gap here to tap into that fair value gap, then spring higher for this. That's what I said. But firstly, before we gauge this, we want to be looking at all this price action here. So once this candle has closed, we will know. This candle will give us an indication of what is going to happen in the future, in near term. So now we are just going to focus on this. Now, do you see why price was doing what it was doing? If you know how to mark this thing, you will see properly. This is the bearish order block that was respected. In fact, look at the main threshold. When this one came down, the delivery is what I'm looking at. This is a balanced price range delivery. So this was balance and balance. So that's what I'm looking at. So now look at the key levels. The main threshold, which is my main concern, this one respected it. The opening price, this was what was respected here in time. Understand? So that's what I'm looking at. So we have this fair value gap. We have this balance, these levels respected. So these are the levels that I'm extending time. So I know what's going on. If you take this candle to this candle, the main threshold is close to this opening price of this last of close candle. You can do the body to body, you will see it yourself. So I'm zooming to this area of price action. So let's go to the weekly. Now look at the weekly. What do we see? This is what we are seeing. Now we have a weekly bearish order block, the last of close candle. Why? Because all these candle trade down, especially this last one crushing this. I'm not talking of this, I'm talking of this last of close candle. So this was like this is a bearish weekly order block. The main threshold, take it, extend it. This is what we have here. So we are going to drop again down to our daily time frame. On our daily, what do we see again? So this is the daily. This white key level, this level here is not, this is the opening price of that monthly time frame, the opening price of the monthly order block. This is it. Now do you see why it's respected? One of you came to meet me and asked me, why is this fair value gap not being filled? The reason is because it was respecting this key level. Do you see? Price direct, reject, move there, reject, move there. Let me zoom so you guys can see. Now do you see this? Look at this back and forth movement. Now this is the weekly level, the main threshold of the weekly order block, bearish order block. So while price was trading through it in the daily, it was being respecting this higher time frame, the monthly opening price of the other block. Now look at that, perfect, very perfect. So this gives us a context that the market wants to gravitate down to take this sell side liquidity, hopefully. But on the weekly, what are we seeing here? We have a fair value gap here. Take this fair value gap here to there, extend the mean threshold. You understand that we are having problem because of it's trying to barge into that mean threshold. Not only that, there are lots of factors and things to also take note of. This last of course candle, it's the fair value gap here. If you can extend that, you will see what I'm seeing on the monthly. This fair value gap, you will see what I'm seeing. So anyway, let me make it simple. Let's go down to the weekly. So now let's drop to 4 hours and see what's going on. Now this is my immediate draw on liquidity. When I was around this area, I bought into this box. I was buying here when I uploaded that. I bought that market over there. So then I knew that it will respect. Since this has been respected, I knew it will respect this. So to reflect and respect this weekly bearish order block, all these things you are seeing is just wicks. Do you see that order moving up and all that? It's just wicks on the weekly. On the daily, it's showing us body candle, it's consolidating. So now on the 4 hours, what do we have? Now look at the 4 hours. We have, this is where I was. So this is what I marked on my chart. So I saw this. Once I saw that this has been respected, look at how it respected it. This is the body. This body closed. Two bodies. One closed, stopped there, opened, continue. This is algorithmic. You don't get this anywhere anyhow. This signature is algorithmic, on top of the fact that it was doing that on a higher time frame key level, the monthly for that matter. From 4 hours was respecting the monthly. Do you see how obedient this price action was? So the indicator is that it's trying to reject. So after doing that, we saw that rejection, tapped into this weekly order block, normal, the weekly bearish mitigation mean threshold, the weekly mean threshold of that bearish order block, tapped there. This fair value gap was what respected. Do you see this thing now? Do you see this, guys? Now this is why you guys have to know how to do the right thing. This fair value gap was respected. Why was it? The high, the displacement high was respected. The body closed there. The main threshold was not respected, but this one was respected. The fact that this was even a bearish order block. This is a bearish order block on the 4 hours. Now this bearish order block, because of it is a small large close candle, that bearish order block is this candle. We are using the wicks and the opening price. I would like to use the opening price because of the way it's forming. So the opening price was respected. If you draw this last of course candle, you will know that there is this one. If you draw this opening price, extend it, it was respected. So that makes it even more balanced. So now after that, we have this consolidation. So this is where I drop down to 30 minutes, the time frame. That's where I took my entry. So now I want you guys to notice something. Let me do something here so you guys can see what was going on. Now when this thing was breaking structures, breaking the lows, let me start with this. No, we know this, but let's start with this. So this was breaking the lows. Let's stop there. Now we'll go to 30 minutes. We now see how these lows are being respected. So once you take the low, every low is taken, we are seeing a new formation of a other block being formed. So we are seeing a mitigation. So now this is where we are going to drop in the 30 minutes time frame. Now look at the 30-minute time frame. This is it. So this is where I bought. So I bought around this area here. This is where I bought here. There's some, I used one of my Q zones. I used them and I was able to measure what was going on, because I know that at the end there's a other block here, so I extended that other block. So I bought into this fair value gap. That was what I was buying. So I went get out of the market. So I waited for price to do its next move, which I took my entry here. So I was posting and showing you guys, can you study, see what's happening using the relationship of 30 minutes to the 4 hours. You will see what was going on clearly. So that was why I was picking my entry. So now do you see how price was showing the willingness to come down? Look at that until we get here. So this was what makes the price go down into this drawn liquidity. This was the drawn liquidity, mind you. This one, I'll highlight it. So when we go into a lower time frame, I'll highlight it for you. So this was the drawn liquidity. If we go to the 30 minutes, let me show you guys the draw. We'll go to the 4 hours. So this was the drawn liquidity. I want to show you guys. This is the drawn liquidity. This is where I targeted this first and that. So that was what made the real price, and that was a beautiful run. Now that's the drawn liquidity. That was a beautiful run. A beautiful run. I don't want to do something complicated here, so look at this very well. Look at this closely. What do you see in this place? If you had been here to take your entry, what is this? So we'll go and look at that now. So let's look at that. So look at that. We know the market is consolidating. So it has balanced this fair value gap. So that fair value gap has been respected. So now the market drop aggressively. We have this series of fair value gap inside of themselves. It looks confusing. There's no need. That's when, if you know how to trade using macros, Q zones. I have a specific Q zone I use. So I use them to measure the high, find the high of the day, the low of the day. It's not ICT's Q zone. It is something refined from ICT Q zone. So that was what I use. One more thing is that some of you will want to use, like I said I use Q zones. A lot of you is like, how do I know? I know when the highs and lows will be formed in synthetic indices, and this is what I teach those in my private mentorship that are having a mastermind class with me. So we wait, so we don't enter into a wrong market that will just take you out. So that is the benefit of understanding how to read how this market move around. So I took my entries around this area, and I took some here. When I was taking the entries, I was not just taking, and I knew the price was running down, so I was waiting for my Q zones and other PDRs. The key zones does not show us direction. It only tells us how the story wants, how the algorithm wants to direct. That's all these things. Many people are looking for time. Now when you tell them that you are using time to trade, they will tell you, hey, give me time. If I have the time, I'll make money. No, the time does not show you any one direction. It only allows us to peer what the algorithm is trying to do with the PDRA. So definitely you still need to learn how to read your price, your PDRAs. You need to know how to know your bias and all those things. I'm saying this for the people that maybe one way or the other you are trading currencies and all that, and you are using ICT's macros. The macros are not showing you any directions or these Q zones. They don't tell you directions. They are not meant to tell you direction. They are only meant to tell you what is likely to happen for a specific run on liquidity or inefficiency. So once that has been accomplished, just like what have happened here, that was what I traded around this area. I saw this starting from here. I was measuring this. Then I saw that I had the chance. My key zones happen around somewhere around this area. So, but did I use it? No, I didn't. I had to use price action to see. We cut through candles. It's not supply and demand. This is how ICT has been teaching us. So I use that. Take this trade here. Some of you were asking that how do I know that this will happen? I knew, because I'm expecting this run. So I knew. So even around that area, I knew when to take the trade. So I knew where I put my stop. Someone entered around here and was stopped out. One of you that was following and reading price on your own based on what I've taught you guys. So he was stopped out. He was completely feeling bad, and I explained to him that I explained to him what I wanted to explain. I won't say it here. So that one is for another day. So I targeted here, and I knew when to get out. You see, it's just for you. The time windows allows you to know high probability trade setup and low probability trade setup, so that you can choose. It's not that it will tell you buy here, sell here. If you are thinking that's what time windows or time sections allows you to do, then you are wrong. You won't get it right. So I just told you some jams there. So now let's continue. So the price continue moving downward. You'll be able to see. If you can't see properly, you go to your 1 hour, you read the narrative, you know what's going on. Look at these levels. Once this has been broken, mitigation. This has been broken, mitigation. Do you see that? This broken mitigation till we get there. So this is what has significantly been happening on the V10. So I hope this was insightful to all of you. If this was very insightful, you guys just go back test it and read the price action on your 4 hours in relation to your daily time frame. You will get the content of these PDRs I've taught you guys, especially on the order block and the fair value gap. We have a fair value gap. Yes, it was broken. Fair value gap, return to fair value gap. You took your entry, you leave it, price run, fair value gap displacement, return back into that. This is mitigation. This is just mitigation, pure mitigation. So if you have took your trade over here, you would have known that something is about to happen. If you have the confidence to take that trade. If you don't, then you wait until you see something like this. Once this structure, this low is taken out, then you can wait. So you wait and you take your entries here. You can use your optimal trade. Your FIBs will allow you to pick optimal trade entries here. Let me go to the 1 hour. You will know what I mean. This is where I'm talking about. So when you plot your FIBs, those that are using FIBs, from your swing low, the swing guys, sorry, to that swing low. This is the swing low you are using, this one, and the market gravitates. The week move above 50%, the equilibrium, yes, into 62, yes, and there's a fair value gap, yes, you take it, put your stops. So the market will just keep running down. So that was what really happened when we are taking this trade setup. So I hope this was very insightful to all of you. Until next time, I'll see you in the next class. Until then, take care and bye.